What's up, world? My name is Kevin Siskar, and you are listening to this episode of Ambition Today, a podcast show discussing with other entrepreneurial and ambitious people what it means to achieve success, grow your startup, accomplish your goals, and try to change the world today. On this episode, we are joined by Jeff Wald, co-founder of WorkMarket, a freelance management system which helps you curate, manage, pay, and analyze your non-employee workforce. Really excited to have Jeff on this episode. I'm also excited that Ambition Today is now on YouTube. Yes, as you know, we are already on iTunes and Stitcher, but now Ambition Today is on YouTube as well. You can look up the channel name, which is, of course, Kevin Siskar, and take a moment and please subscribe to the show. Today's episode of Ambition Today is brought to you by none other than Audible.com. Visit audibletrial.com/ambition today to download and keep any audiobook for free. This is Ambition Today.
Looking to make your dreams come true? Needing that extra push to become more successful? Then you've come to the right place. Welcome to Ambition Today with your host, Kevin Siskar.
What's up, world? You are listening to Ambition Today, and I am your host, Kevin Siskar. You can find me on Twitter at @thesiskar and online at www.siskar.co, the home of Ambition Today, along with much other great content. On today's episode, we are joined by Jeff Wald, co-founder of WorkMarket, a freelance management system which helps you curate, manage, pay, and analyze your non-employee workforce. Jeff, welcome to Ambition Today. Thanks for coming on.
Thank you for having me.
So where are we today? We're at the WorkMarket offices?
You are WorkMarket's global headquarters.
Nice. And you guys are in Times Square now, right? Essentially?
We are. I mean, it's a fun area. You know, a lot of costume creatures looking for people to take pictures with them. We're technically in the Fashion District, which is an area with tremendous rich history. At one point, a third of all garments worn in the Western world were made on these blocks. Wow. And now none of them basically are.
But there is some really cool places like hidden in this area.
Oh, without a doubt.
I have a really good friend. He's launching a fashion brand, Ambrose Madison, and we go to these back like, you know, leather shops, and there's really cool creative things going on still here.
I don't doubt that there are cool creative things going on in hidden leather shops all over.
Oh my God. All right. So Harvard Business School. We'll transfer from that to Harvard Business School. So I want to know what happened before that and before university, and what led you to Harvard, I guess. What was...
Well, you know, I was fortunate enough. I did a combined undergrad and grad program at Cornell for a master's in public policy, and I had really thought that I was going to go work in government, and I decided to do a quick 180 on that, and ended up at J.P. Morgan in their M&A group. And after 4 years as an investment banker, I thought business school would be a great way to transition, and I was fortunate enough that the firm decided to pay for it, which they'd never done in the 220-year history of the firm.
That's awesome.
I made the mistake of only applying to Harvard, and when I say mistake, it was a mistake for that 30 minutes when I was heading back to my apartment to get the envelope saying if I got in or not. Suddenly I was like, why didn't I apply to any other schools? What if I don't get in? This is a disaster. But luckily I did, and it was an amazing experience, and it was a great transition point to my next journey, which was at a venture capital firm. Okay.
So you got an MBA.
Yep.
You have also a master's of public administration.
Yep.
So 2 master's degrees. So why so much school?
Well, you know, I had a very different thought when I was leaving undergrad. You know, I was very focused on public policy, on public service, and I thought that was the avenue I was going to go down. There were a few very specific organizations that I wanted to work for, and after getting to know those organizations a little bit more and really understanding the day-to-day and what those jobs would actually be, it was very disillusioning. And so I was very lucky to be able to pivot quickly and get the job with JP. And after that, it became a question of, well, do you go get an MBA? And I would say, and I offer apologies for what I'm about to say, but the return profile on taking those 2 years off to get an MBA, I think is somewhat challenging unless you're doing a complete career shift or unless you go to very specific universities that bring incremental benefit through their network and through their brand. So certainly Harvard and Wharton and Stanford, you can make a case for a host of other schools, but I think that it is a challenging decision for a lot of people or I don't know if it's a challenging decision. I don't know. I think it is challenging to find out whether or not you really got a return on your investment.
Okay, and that actually segues into my next question. So, and this might not even be the right question. So you feel free to change it if you want. But I'm curious now that you've had an MBA, but you've also started 2 companies. Which one's a more valuable experience? And is that even the right question? Are they even, maybe they're exclusively separate? Maybe they're not the same thing, or are they?
They are completely separate, and without question, starting companies is easily more of a learning experience. I will tell you the best learning experience I ever had was the investment firm that I worked for, the Israeli VC. After business school, we'd invested in a series of massage schools, a company called Cortiva, largest provider of wellness education. And the investment went south, and I had to parachute in and run that company. And I had never run anything to that point. But wellness is a personal passion. My older brother and his wife are both yoga teachers, and they have a company that provides wellness services to corporations. And so I was happy to jump in, and for 9 months we ran that company. And for the first 6 months, every day we were 2 weeks away from bankruptcy. And that experience of just everything on fire and the whole building about to burn down and doing everything you could to save as much value as possible, that was the best experience I ever had. And right when that finished is when I left Glen Rock and started Spinback.
Gotcha. So would you recommend, if someone's thinking about starting a company, they're not thinking about a career shift or something like that, but if they're thinking about starting a company, would you recommend doing that, or would you recommend getting an MBA if they're kind of on the fence?
I would recommend doing it. I would not recommend getting an MBA if you want to learn how to start a company.
Gotcha.
There is a great blog post that I keep meaning to write that I have not written, called "They Didn't Teach Me to Unclog the Toilets at Harvard," meaning that almost everything that I did those first 2 or 3 years, nothing about my business school experience, not the network I built, not the brand that I get to associate myself with, not any of the academic lessons were applicable, because sometimes the most important thing I would do during the day is unclog the toilet. And, you just don't learn the things that have to happen nuts and bolts in a higher education environment. You learn a lot of other very valuable lessons, but not the lessons, in my opinion, that are applicable to our world.
So you went from Harvard, and let's go through this a little bit in order. So then you went to J.P. Morgan, correct?
No, I went.
I'm sorry.
Cornell to
You went to
JP.
Cornell to JP, then back to
Yep.
back to Harvard. So what was the biggest takeaway you took from your time on Wall Street?
I would say that anybody going through those analyst programs, you do have a certain work ethic. You do get a certain very, very broad business background and education, and they are really invaluable. The things that I learned in that M&A group, and they were not easy things to learn, right? They're very, very difficult environments to be in. And it does dictate a lot of not only what I do and how I do it, but how I lead. I will be criticized for being too blunt, too harsh. My interview style is very aggressive. The interview style at an investment bank is very, very in your face, right? If you can't handle 30 minutes and think under a very stressful situation, you're just never going to survive on the M&A floor. And so bringing that mentality is very important in terms of just, to put it in a phrase, right, going through a wall. Doesn't matter what's in your way, you're just going to get it done, because that's what these kids are trained to do. But it's important to balance that, because you do come out of there being a tremendous jackass. And so, getting the humility, which some might say I still don't have, but there were a number of very important things that occurred later that kind of brought me down to earth. But if you can find a way to balance that, the training you get there is really invaluable.
Great. So you went from JP to Glen Rock, right?
JP to Harvard to Glen Rock.
JP to Harvard to Glen Rock. So what was your time at Glen Rock like? And what was Glen Rock?
Well, Glen Rock is an Israeli venture firm. Getting the chance to work with entrepreneurs, which, at JP Morgan, we were advising very large corporations, right? I advised, Chrysler on its merger with Daimler-Benz, which ended up being a disaster. We advised very big companies on very big strategic transactions. At Glen Rock, I initially started doing LBOs, where we would buy companies wholly and help to make operational changes and improvements. In the case of Cortiva, not so much until the end. But getting the chance to actually sit with entrepreneurs, right, as we started to go earlier and earlier in the value chain, right, that experience was just so incredibly enlightening. It was such a uplifting thing to be able to sit with people and say, wow, I don't know if you're going to succeed or not, but you're trying to change the world. You're trying to change an industry. You're trying to change a process. You sat there at some point in your career to these entrepreneurs and thought, there's a better way to do this. And I'm willing to risk my career. I'm willing to risk my time, my money to give it a go. And if I'm successful, I will make money. I will be impactful in my industry. I'll help, shape the human experience. And if I fail, I fail, right? And I will try to dust myself off and get back in it. And there's something so invigorating about being around that. And I remember
the energy you can just feed off of.
Loved it. There were two entrepreneurs, David Perla and Sanjay Kumlani from a company called Pangea 3. And I remember meeting with them, and I just was smiling ear to ear. I was just like a little puppy dog, like, oh my God, you guys are so great. I love you. And I just thought everything they were doing was so amazing. They just thought there's a better way to do this. And they built a company, and they, sold it to Thomson Reuters, and our firm invested, and we made money. And it was great. It was really just a great experience. And some point, I thought to myself, you know what, I'm so enamored with these people, maybe I should try to become one.
Gotcha. Is that the number one thing you would recommend to someone maybe trying to, early on an investment, spend time with founders versus, due diligence, analysis, or what's more important there?
Well, I remember one of the things that I would always say is I'd hold up someone's business plan and I'd say, the only thing I know for 100% certainty is it ain't going down like this. That I know. Right. I don't know if it's going to be better. It won't. I don't know if it's going to be worse. It will. But all I can bet on as an investor, when I did that as my profession or as an angel investor now, all I can bet on is you, right? I can bet on you and your ability to adapt, to take new information in from what you're learning from customers, from your team, from users, from competitors, and for you to adapt and to go through a wall to get to what you think is a better place. That's all I'm betting on. Nothing else.
Yeah. I agree. So you left Glen Rock, but before you left, I guess one of the questions I wanted to touch back with. So what advice do you have to other people that want to get into VC? You took the Wall Street route in. A lot of people take the founder route in.
I think the founder route is easily the best route. I mean, look, there's so few jobs there. And I've had this conversation with a number of people that are in finance, that are doing other things, saying, I want to be in VC. And I just kind of look at them. I'm like, okay, that's great. Like, you appreciate that maybe there are 100 jobs in New York City, right? And at any given time, one or two is available. Why do you think that somebody would say, you know what, you're the person that I want to trust with my LP's capital to go and deploy that, right? What experience do you have doing that? Well, if you've been on this side of the table, you have a huge amount of experience, right? You know what it is that makes people successful, or at least I shouldn't say you have a better sense of what it is that makes someone successful or has a higher probability of being successful. You certainly have the network to help diligence things in terms of, well, what are other companies doing? What are other technologies? And, you have a lot of credibility because you've kind of been there and done it. But if you've been there and done it and not been successful, it's a little more difficult to make that case. So I do think the founder route is not only the best route in terms of pitching your case to say, hey, LPs, you should give me capital to deploy because I have a chance of generating returns with it, as well as, the ability to actually generate those returns.
So being as, VC, there's only, a few spots in the city for it. It's a highly coveted job. Some people work their whole career to get there. Mm-hmm. You left.
I did.
To start Spinback.
Yes.
Okay, so what led you to create Spinback and why leave what everyone thinks is a great job? Well,
there are a whole host of jobs that people think are wonderful that, on the inside are not nearly as glamorous as
that's definitely true.
As people might think. Look, the ability to go and actually do something tangible and to try to build a company was just way too alluring. And
especially when you're spending all this time with these founders and
yeah. It was just, you know what? I want to give this a shot. So it was nothing more than that.
Okay, so what was Spinback?
Spinback was a toolkit that allowed corporations or anybody to share products through the social web, which when we first developed it was actually quite innovative. It doesn't sound so now. But in 2006, that was quite unique.
Yeah, social was new.
Social was new. Our first beta version was very focused on MySpace because that was the place to go. And
it's funny, like you just say MySpace and people laugh.
I know. It's just so sad. So we went and built that. And, the narrative that not a lot of people know is that company actually went bankrupt. And, me and one of my co-founders had been funding the whole thing. And that actually wiped me out, right? Like, that was it. I got the call from my mom saying, do you need to move back home? And it's like, well, in another 2 months, yeah, because I don't have any more money.
Yeah.
Right. Everything I had made, I had lost. And that would be one of those humbling experiences that kind of says, wow,
definitely,
this is not fun. I will tell you, it was an amazing experience in retrospect, right? It did a lot that helped make me the person I am today. And it was probably a very good thing to go through. It certainly is not something you think while you're going through it. But, you got to pick yourself up and dust yourself off. And so we did. And once everything, we went bankrupt because my two co-founders sued each other. And it was a disaster. And I'm not legally allowed to say more than that, actually, because of all of the settlement agreements between these two idiots. And so I probably shouldn't have said idiots, but that's okay. You don't need to wipe that out.
That's fine.
Once that was done, me and one of the people were able to kind of reconstitute the company, find two new partners. And so the four of us then refounded the business. And it ended up being a good outcome, right? We sold it to Buddy Media, and then Buddy Media got bought by Salesforce, and it was great.
Wow. So, and I've seen that as a theme before too. Like, founders lose it all, double down, do it again, and then come out successful. So, but we will get to that after we talk a little bit more about your second company.
Sure.
So Spinback was a great result.
Eventually.
So after Spinback, you went to Barington?
I did. So that was actually at Barington Capital is an activist hedge fund. There was something about that space that
you
I've
went
always...
back to Wall Street.
I did go back to Wall Street. Right. It was part of the dusting yourself off.
But you're humble now.
Yes.
You're humble on Wall Street this time.
More humble. I'm sure you could find many people that would disagree with that. But, there was something about activist investing that I always found very appealing. This notion that there are these inherent imbalances in the capitalist system because you have this disparate ownership of a company, right? 1 million people own shares in IBM, but very few of them own enough shares that the people that are managing their assets, right? If you're a shareholder, you own the company, right? I own a stock, 1 share of stock in IBM. I own 1/1,000,000th of the company. The people managing the assets that I own are not me, right? They're the managers, the CEO, CFO, COO, and they're hired by the board of directors. And that board of directors sometimes is not listening to the people that own the company. And you need institutions, you need investors that are willing to step up and take that fight. Now, activist investors get painted with a very broad brush. There are some people that are very focused on short-term gains and then selling out. Barrington is a long-term activist investor. Their average hold period is 6 years, where they see a company and there are things that are going on that are suboptimal. So management's paying themselves too much. They're hiring their family members, their private jets, whatever it is.
Right.
They have a poor strategy. They blah, 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 blah. And we will go in, buy 10% of that company and advocate for change. And if the management team doesn't want to listen to us, who are now the largest owners or one of the largest owners, then we will take our message to the other owners and we will get onto the board of directors and change management if necessary. And there's something that is just very, I'm going to use the word magnanimous about that, because everything we're doing costs us a lot of money, but every shareholder benefits equally from the work that we do. And so it's really just a wonderful, and I think a necessary actor in the capitalist system to help enforce those checks and balances that sometimes get out of whack. So I still sit on some boards of public companies from that, and I learned a huge amount that certainly helped me here. But that was a 2-year stint at Barington.
And I think the key thing to that is the long-term approach.
It is. I mean, look, there are certainly a lot of activists that just go in, yell and scream, want the company to do something, the stock pops, and then they get out.
Yeah,
and
that's not good.
I don't think that there's a strong case to be made that those things are good for the system as a whole, but not an argument that I'm learned enough to have.
Gotcha. So after Barington, and this is where I think the story gets to get good, and we are where we are at now, Work Market comes about, correct?
Mm-hmm. Yep.
How did that come about?
Well, when I was at business school, I remember reading a paper. This is going to get real geeky for a sec.
That's fine.
I'm going to dork out here. There's a paper by a economist named Ronald Coase. He won the Nobel Prize in 1937. He's an economist, and he wrote a paper called "The Nature of the Firm," where he idealized what is the right structure for the corporate entity. And his conclusion was the right structure was a very, very small fixed cost kernel where almost every other function was done via contract, independent contractors. And that was the right way to run a company in terms of maximizing its benefit to its owners, right? And you can certainly debate and discuss as to whether or not that's the right thing for a corporation, but let's accept for a second that it is.
It's definitely a trend that's happening right now, the rise of that.
It is.
Yeah.
And so I remember after reading the paper, his conclusion, though, was that the transaction costs associated with setting up the structure outweighed the benefits of the structure. So it was so difficult to spin up independent contractors, to put in place the business processes, to weave your way through the regulatory frameworks, that it just wasn't worth it. You might as well just overburden the enterprise, and I'll air quote overburden, with a higher fixed cost base than it really should have, because going to a variable cost structure in the end costs you more. So why do it? And I remember thinking when I read the paper, you know what? That's probably not true anymore. That the evolution of technology, the different systems that companies now have, the different way corporations have formed themselves around processes, be it just in time, be it outsourcing of different functions, have probably made this more capable. And so I tried to go down the intellectual road of rewriting his paper. And that was a disaster because I'm just not that good.
Yeah.
And so it kind of sat on the shelf, if you will, until my co-founder and I decided to found Work Market, because you were starting to read all of these different things around the variabilization of work. And McKinsey around that time had come out with a study that we both were reading, saying that if companies had the systems and processes to engage on-demand labor at the scale they would like, this would go from a $1 trillion market to a $3 to $4 trillion market. And we thought, you know what? Let's build those tools. And that is really the intellectual underpinning of Work Market.
Okay, great. We're going to take a quick break, and then after the break, I want to talk about where Work Market's at now, and how did you attract, well-known investors such as Spark Capital, Union Square Ventures.
Sure.
You're also a police officer in your spare time, I think. So we'll talk about that a little bit. And also, you recently wrote an article in Huffington Post called "Why I Mentor," and we will talk a little bit about that. So we'll be back in just a minute.
This is Ambition Today with Kevin Siskar. We'll be right back.
Today's partner of Ambition Today could be you. Think about it. But seriously, audible.com. Visit audibletrial.com/ambition today to download and keep any audiobook for free.
You're listening to Ambition Today. Visit us now at siskar.co.
Welcome back. So we're here with Jeff Wald, co-founder of Work Market. So Jeff, where's Work Market at now? And then I want to hear a little bit about how you got to there and attracted Spark Capital, Union Square Ventures, some well-known investors.
So we are now $36 million of investor capital into the company. We are approaching 100 people. We will do about $100 million in gross top line. So that's the amount of labor that goes through the platform. And there are over 100,000 workers that are on the platform and active.
Nice. Congrats.
Thank you. We've been really lucky in terms of playing into a very, very big trend. And, you always want to go after big markets as an entrepreneur. You always want to have the trend be your friend. And, the rising tide lifting all ships. There are a lot of fascinating companies in this space. There's nobody that does exactly what we do, but they're all kind of starting to come close. And so for right now, we don't really have too much competition in an industry that is growing very rapidly. Now, those dynamics will change, but that was the major bet that the people at Spark and the people at Union Square, our first two backers,
and SoftBank as well, right?
made. SoftBank came in later.
Oh, later.
But, look, when my co-founder and I wrote the first business plan, we had both had a very long-standing relationship with one of the guys at Spark, Mo Koifman. And Mo he's been a great, friend for many years, right? And he had supported our intellectual thinking on it when Jeff and I my co-founder and I were just ideating for 2 years about this idea before we actually put pen to paper. And Mo was, involved in those brainstorming sessions, and he knew, look, these are two guys that have kind of been there and done this. They're experienced. They're going after a huge market, and who knows if it'll be successful. But those are the kind of bets I think VCs like. They're betting on people that have kind of been there and done it. If not in that specific industry, and my co-founder had been in that industry before, certainly have proven, look, no matter what it takes, we're going to go through a wall and get it done. And then Mo actually introduced us to Fred Wilson at Union Square. We had obviously heard of Fred and read his blogs and things like that, but neither one of us had ever met him. And Fred met us for breakfast, and by the end of breakfast, he just said, "Yeah, I'm in," and that was it. And that was me, Jeff, 14 PowerPoint slides, and that was it. And that they gave us $6 million to go and build it.
That's great.
It was really quite amazing. And we were just very lucky to have people that believed in our vision, that believed in us, and supported us through that. And so for the first 2 years, it was just, me and Jeff, and then the initial team, who were an amazing group of human beings, and they 18 hours a day, 7 days a week, sleeping in that office, a lot of late nights. We got the first version of it up, and it was pretty terrible. And you iterate, and we are just lucky now, not only for everyone that built this initial version of it, but to this team that's come on and has refactored a lot of it, re-architected a lot of it, and built it for scale, because the product that we had 2 years ago just wouldn't work today, right? And everything that we did wasn't incorrect. Obviously hindsight's 20/20, and if we knew we were going to be at a point where we are now, maybe we would have taken another year to build the product the first time, but it would be imprudent to use that first round of capital to build the bulletproof, scalable,
right. You need to get feedback, right, from customers, iterate.
You got to get it out there.
Iterate if you take too long. Exactly.
But unfortunately for us, it took many millions of dollars and the better part of 2 years to get that MVP out, because you're dealing with a very, very complex process, the engagement of on-demand labor, and it is a very big process, right? It's not just complicated in short bursts. It is complicated over a 3-month engagement period.
Right. So, these aren't just one-off tasks. These are
some of them are
projects.
one-off tasks, but for the most part, these are much higher dollar volume engagements, right? It's not TaskRabbit. It's not Upwork, both of whom are great companies, but this is, Yahoo managing their entire on-demand, blogging team. And so it's people earning thousands of dollars and spending a huge amount of time.
Okay. And then I heard actually recently, so you're up to 100 people now, but I heard recently you start every meeting with the same question?
I do start every meeting I have with the same question. I have a few questions. If it's a big meeting, I will say, well, what is the goal of this meeting, right? Like, what are we here to do? And whoever's calling the meeting, if they don't know what the goal is, I will end the meeting. Say, okay, well, call me back when you know what it is you want to accomplish, because I don't know why I would be here if you don't know what you want. If someone comes to see me, and it's an individual meeting, I'll say, all right, A, what is your goal, right? Do you want to, and B, what type of conversation do you want to have with me? And these are all things that I got from my coach. And I will say I was very resistant to getting a coach.
Okay.
It was something that our board kind of insisted on. I think all founders could probably benefit from that, because we have a very specific way of thinking, and especially as organizations scale, there is that very traditional tension between the people that started the company and the skill sets that are required to take the company to the next level. And those two are sometimes pretty mutually exclusive.
Yeah.
And my coach has certainly helped me to elevate my game. An amazing guy named Jonathan Shapiro and his company Semper Alto. And the question of what kind of conversation do you want to have becomes very important, right? And he would say that there are 4 different types of conversations. There's a venting conversation, which some people want to have. I was like, okay, do you want a venting conversation? Come on, bring it on, vent. That's cool. I'll listen. Do you want to have a relationship conversation, which is, hey, I just want to come on and hang out. I just want to make sure we get to know each other better. And that's great. Those are obviously very important. You have to build trust with the direct reports, with your colleagues, with whomever. There is an action conversation, right? And I think that's something that founders basically want all conversations to be, right? We just want action conversations. Who is going to do what, by what time? What are you going to do? What are the deadlines? That's what I want to know. Right. And I will say that I do still kind of want most conversations to be action conversations, right? Get to the point. What do you need? Let's talk about how we get it done. And then the 4th type is an idea conversation, right? We're just going to ideate on something. We're going to put something out there and we're going to iterate and see if we can come to a really good conclusion. And then an idea conversation may lead to an action conversation, but there are 4 very different types of conversations. And so I want to understand what conversation I'm having with people because the way you approach them is very different.
Right. So you mentioned how you now have a coach, and I actually wanted to ask you about, you recently wrote that article in the Huffington Post about why you mentor.
Yeah.
But before we get into that, so you are a mentor.
Yes.
And you have a mentor.
Yes.
So how important is it to always just be upping your own game with your own mentors while still mentoring and giving back to other people?
Look, I think it's incredibly important. One of the most important things that I've learned from Jonathan is this notion of a fixed mindset versus a growth mindset. And I think a lot of people come in to this world with a very fixed mindset, which is things are as they are, and every single thing I'm doing either proves that I'm really, really good at what I'm doing or disproves that notion and makes me sad, right? If a meeting goes well, all it means is that I'm awesome and that meeting went well because I'm really good, as opposed to a growth mindset, which uses every opportunity to improve. And so everybody should, and I think needs to, have a growth mindset, especially people that are managing high growth entities. And the ability to have somebody for me to look to help me kind of think through what it is that I just experienced. And I will tell you, most of my conversations with Jonathan, with my coach, are venting conversations because I'm venting on the things that I know I did poorly. And Jonathan would say that that would make me consciously incompetent. So I'm doing it poorly, but at least I'm aware that I'm doing it poorly.
Right.
When I started with him, I was unconsciously incompetent, meaning I was doing it poorly and I didn't even know how poor I was doing. And so I'm kind of moving through that growth pattern there, but it becomes incredibly important. This is what I kind of wrote about in that HuffPo piece to mentor others. Some
quick background on that for our listeners. So Beatrice was actually on the last episode. So our audience is familiar with Beatrice. So you recently wrote a Huffington Post article called Why I Mentor, and you talked a little bit about the relationship that you and Beatrice had and the mentor-mentee relationship. So to flip the script, if that's the way you experience with Jonathan, how is it then with Beatrice when you put yourself in Jonathan's shoes as the mentor? And why did you write that article? Why did you feel passionate about that?
Well, I will tell you that, first of all, Jonathan has a lot of training in doing what he does. And so he goes a little bit beyond being a mentor, right? Like, he is trained in psychology, right? He's got his PhD or some advanced degrees. And he's just somebody that's kind of been there and done it. So in addition to being a mentor, he is trained in how to kind of improve behavioral patterns. The article with Beatrice came about, and, I met Beatrice through the Founders Institute, which is just an amazing organization. And I think all the things you've done with it recently have made it even better.
Thank you.
And so Beatrice and I had met, and she had said, can you be my advisor? I was like, okay. This was 2 years ago. And that advisory relationship became closer and closer, right? And during our time together, we would have a lot of action conversations of me saying to her, okay, I need you before the next meeting to do this, this, and this. Do you understand? That's what I expect at our next meeting. So, okay. And it would help focus her efforts, knowing that she would come in and meet with me, right? I was acting kind of as her board, right? But we would also have a lot of relationship conversations because I would get to know very deeply the things she was going through, right? Some of the challenges she was having, some of the things that she hoped for her company. And those things become very important. And at one point, I guess maybe 2 months ago, she stopped, as we were wrapping up. She said, "Can I ask you a quick question?" I was like, "Yeah, you can ask me anything you want. This is your time." She said, "Well, when I asked you to be my mentor, why did you say yes?" And it kind of threw me. First, because all of a sudden it occurred to me, I was her mentor, right? I didn't really think of myself that way before. I thought of myself as her advisor.
Okay.
And the first thing I did was kind of sit there a little dumbfounded at the question. And then I said to her, "You know what, Beatrice, I agree with you that I am your mentor and not your advisor. And let's draw the distinction as to what those two are, right? I have a lot of advisors here at Work Market, and I call them every now and again, and I ask them for a very discreet thing. Hey, I see you're connected to Joe Smith at ABC Corp. We're trying to sell there. Can you call him and make an intro for me? Hey, we're looking to hire, a new senior architect. Can you make some recommendations for me?" Doing that doesn't require any knowledge of Work Market, right? It just requires a relationship with Work Market, and they have that, and they're remunerated for it. For me to ask them some serious advice, right? Hey, we're thinking about offering a W-2 option within our 1099 structure on Work Market. What do you think of the pros and cons of that? Who are some partners we should talk to? They would have no context to offer any real advice, right? One or two of them has some industry expertise, so they are more capable of offering advice. But because they don't know everything that goes on at Work Market, it's impossible for them really to offer anything of any use.
Right.
My relationship with Beatrice is such that we meet once a month. Do I know everything about her business? Of course not, right? Nothing will ever replace what it is the entrepreneur knows, thinks, feels about their company. And that's why at the end of the day, everything is on that founder's shoulders to get it done. But I am more capable of offering her advice on strategic issues, on product issues, on employee and personnel decisions, because I do have a deeper understanding. And I think that's the distinction between the mentor and the advisor. So I had said to her, "Well, you know what? There are 3 reasons I said yes." And this is what the article goes into. The first is that she asked, right? You don't get what you don't ask for.
Definitely.
And I had the time. If someone else asked now, I would say politely, no, I can't be your mentor. I could be your advisor. And I certainly have the privilege of advising a lot of different companies here in the New York City startup ecosystem. But to mentor somebody else takes a good amount of time. And I don't have the time anymore to make that commitment to Beatrice, to someone else other than Beatrice. So that was reason number 1, is that she asked. And so that's a very important lesson for all founders is you need help doing this, ask.
Yeah,
ask
you have
people.
you have to go after it.
Yeah.
Yeah.
And so that was number 1. Number 2 was, I've been really lucky with a lot of things that I've been able to do in startup land. And, it's brought me some material success or wealth or whatever. But whatever experiences I've had, I didn't get there on my own, right? There are a lot of people that helped me, certainly with Work Market. One could say even more so with Spinback, in as much as when it went down, right, when it was in bankruptcy, there were a lot of people that helped me dust myself off and get back up. And so you really, in my view, have an obligation to help, as I say in the article, just fellow travelers, right?
I think that was one of my favorite quotes from the article.
This is not an easy journey, and you didn't get there on your own. And whatever end you came to, even if it was a disastrous end, there are a lot of lessons you have. And if you have the time, you kind of owe it to the startup community that gave you a lot to give back. And so that would be the magnanimous reason number 2. Reason number 3 is not magnanimous at all. It's actually quite selfish, which is going through the things that we go through. All right, they're important lessons we learn, but they're not necessarily lessons that get solidified, right? They get solidified by teaching them to somebody else. And so it helps me become a better manager at Work Market, become a better entrepreneur if I decide to do this again, to become a better investor, to apply the lessons that I've learned to somebody else's situation, right? It helps codify it for me, because if I can teach someone else to do it, then I've really learned that lesson myself. And so everything I learned with my coach, everything I learned from Spinback, everything I learned at Cortiva, everything I've learned here at Work Market, to me to help apply those lessons. And Beatrice may argue that those lessons are completely useless to her and she's got no benefit from them. And I would accept that feedback.
I think she's gotten benefit from it.
But whatever I've learned by trying to teach it to somebody else, it just helps reinforce it for me. And so I think it makes me better the next time.
That's definitely true.
try
I mean,
those things.
I think teaching is one of the best ways to learn.
And it's one of the reasons I love coming and hanging with you guys at the Founders Institute, right?
Nice.
I get to teach at a very broad level, but every time I go there and teach, I learn something new, obviously about the different companies that are coming through FI and different things people are trying. But importantly, I learn things about myself and about some of the lessons we learned at Work Market, either because I'm teaching it or because someone will ask a really good question.
Gotcha. So I want to close out on this note. So you said we have an obligation to help fellow travelers. You actually take that to the next level. You do something with the NYPD, is it correct?
I did.
You did.
And so this was just, look, I think we all had different reactions, and we have different senses of patriotism and duty and community. Post 9/11, I really was looking for something that I could do, to help my country more. I experienced 9/11 while at business school, and, one of the myriad benefits of that institution is that there are a lot of former military officers, people that went through West Point and Annapolis and are using business school as their transition point to the private sector. And I remember speaking with them and saying, I want to join the military now, and I want to go fight for my country, given what's happened in the weeks and months, after. And their reaction was pretty unanimous. It was, no, that's a terrible idea. Right? Your place is not, leading a platoon as a first lieutenant in Afghanistan and wherever we may go to fight this ongoing war. Your place is in the private sector and making the economy strong. And that's what you can do to help your country. And I understood, right, their point of view on that, and we're all given, certain gifts, or maybe we're not. We don't really have those gifts. We just think we do, but we have certain roles to play. But at the same time, I felt a void. And when I got back to New York City and started at Glen Rock, I had heard about this program called the Auxiliary Unit within the NYPD, and it's akin to the Army Reserves, where you can make a commitment as a member of the NYPD, but it is not a full-time commitment. If there is a disaster, you are kind of quote-unquote called up to active duty, right? The reserves are called up, but you're called up in a very short time span, right? It's not like you quit your job or take a leave of absence from your job and you're a member of the police department for 6 months. You're called up for an event, right? And that event is something as innocuous as New Year's Eve in Times Square, which I have worked as a member of the NYPD.
Oh man, that's got to be a rough night.
It's cold. Not gonna lie to you, it's really cold, and I've actually never seen the ball drop because my back is always to it because I'm scanning the crowd for someone about to do something stupid. Or the Republican National Convention was a call up, and I spent a few days there, and or the blackout that occurred
After Sandy.
Hurricane Sandy itself was I wouldn't call it, again, they're not mobilizations, they're just, hey, all the reserves need to show up. And so I had a locker at the 19th Precinct, and I had a police uniform, and I had gone through training. And you are not a member of the NYPD as what is known as a member of the service, right? You're not a full police officer, but you are an auxiliary officer in the New York City Police Department, and it's something that I did for about 9 years, and I had a tremendous experience doing it. It's very satisfying, and certainly you are doing something to help your community. You're not nearly doing what the regular officers do, and you're not nearly putting yourself at risk as those men and women do.
But I a little backstory on myself. So I was actually a volunteer fireman, not as intense as NYPD, but up in Buffalo for the Swarmville Fire Company for 8 years, and I was a lieutenant there. How does that sense of brotherhood translate? Because I think it does, and teamwork and camaraderie translate to building a team and a company. And having people follow you. I mean, because essentially you're watching each other's backs in literal moments of the world and people going crazy and life and death scenarios. It kind of makes corporate life feel like playtime.
It does. I will say that. I did actually write another HuffPo piece maybe 2 years ago called, what I learned as a member of the NYPD, and it talked about always having a plan. Right? You never see officers run at something unless they're chasing somebody. And you don't see them run because they're discussing the information they just got from Central and from dispatch and what they're going to do when they arrive on scene, right? You always have to have a plan going into a situation because a lot of unknown variables are going to pop up, and the more prepared you are, the better. Always call for backup, right? Again, you can't do this stuff on your own, right? You have to have advisors, mentors, people that are trusted that you can talk to. And then that third point in that article was certainly that, you need to build a team, right? And the kind of stuff you go through in the beginning of founding life, right? That is, we refer to it as a war, right? We've been to war together. Now, it's a really inappropriate or inapt analogy for the real things that people go through in terms of war. But you certainly, as a member of the NYPD, and certainly, as you've gone into fires, you learn that things are not that bad, right? You don't overreact to situations, and you become very calm when others are panicking because, you know what, I've been in real life and death situations, and this ain't one of them. All right, so if a customer canceled on us, well, let's diagnose it, let's make sure it doesn't happen again, let's see if we can get the customer back. Nobody freak out. It's all going to be okay. All right, great.
So we normally do the Ambition Today question of the day, but I know we're a little over on time here. So I actually picked this week's Ambition Today question of the day, and it is a question that I asked Beatrice last week. Who would win in a fight, Batman or Superman?
Superman. I don't understand how that's even a movie.
Well, I don't.
Batman versus Superman.
So
Beatrice
how is that
said, even a question?
Beatrice said Batman.
That's ridiculous. I'm
That's
gonna have to
what I
coach
said,
her
too.
on that.
You should coach her on that.
She's not. She didn't grow up here. She's not fully.
But her first business was a
aware.
comic book store. She knows.
Okay,
this
so
stuff.
maybe I don't know my mentee as well as I thought. She and I will debate that because he's Superman. He's invincible unless
that's what I
Batman has
said.
kryptonite, which maybe he's got everything else in that utility belt.
That's a good point.
I assume
Batman
he's got
could
some
have
kryptonite.
kryptonite in his utility
But
belt.
otherwise, Superman is actually invincible, so I don't get it. Batman's just a really rich guy that's got some toys.
Okay, I like it. I'm in the same boat with you there. All right, cool. Well, I wanted to thank you for coming on. I think this has been an incredible episode full of a ton of insights. Where can people go to find out more about you? Anything you want to plug? Anything people should be checking out?
Look, I'm on Twitter at Jeffrey Wald, and if you are looking for freelance work, or if you have a company that needs to manage freelancers, workmarket.com, or reach out anytime.
Okay, great.
It was a pleasure to be here, and I'm just so happy to with everything we've accomplished, and I love being a part of the Founders Institute.
Great. Well, I hope to have you back on a future episode, and I'm sure I will see you around the Founder Institute, mentoring and helping other new entrepreneurs. So thank you, and see you next time on Ambition Today.
Thanks for listening to this episode of Ambition Today with your host, Kevin Siskar. For more great content and to stay up to date, visit www.siskar.co. We'll catch you next time.